Good morning, traders and investors. Steve Gans here with the weekend update for June 22nd, 2025. Now, I'm going to walk through the different indexes that I normally cover here, but at the end of this section, I'm going to toss out an option trade concept or idea that I think matches up with our current market conditions. That's something I'm going to start doing here going forward. And I'd like to ask a favor of you. If you find this content to be of value, please give me a thumbs up, a comment, a like, a subscribe, something that tells me that this sort of content helps you and your options trading journey. So let's take our look at SPY initially. So the first thing that I mentioned a week or so ago is that we are coming up into what I would consider to be a bit of a resistance area here in SPY. So that's these prior highs up here. SPY and SPX, of course, we're talking about right now. Those are the exact same indexes, essentially, except SPY is 1/10 of SPX as far as notional value goes. Coming into resistance, we're starting to chop a little bit sideways over here, but I'm also seeing really big volume spikes on the little bit of down days that we're having. So that's telling me that the volume is picking up as we're selling off a little bit, meaning that many people might not be very sure that our market is going to be stable or going higher here. So at a little sign of selling, they're jumping ship. They're getting out. They have what's called soft hands. They're not committed to staying in their long-term trades right now. And again, that's what will often cause these volume spikes. And it's a little bit of a tell that traders are ready to jump ship if the downside accelerates. And I do think that we have the possibility of some downside movement here based on, again, this big volume bar here, based on the fact that we've got a little weaker as we go through the week. Also, of course, the major events that took place over the weekend with the bombing in the Middle East. That is likely to spike volatility and escalate market fears as well. So that's as look at SPY. It's going to be almost exactly the same picture here. Again, we're also seeing anytime we've got those down days, the down days volume is a little bit higher than the up days volume has been. Oftentimes a little bit of an indicator that things might be weakening. And of course, again, we were at or close to our prior highs, which is a logical point for the market to at least stop and breathe a little bit. But if other things start to creep in, such as news of war, things along those lines, it can do a little more than chop sideways. It can start to move back down. We look at volatility on the S&P, and volatility is not really up at all. But of course, the news that recently came out, the VIX hasn't been open yet since that news came out. So my expectations here come tomorrow morning is that we're probably going to see a bit of a spike in volatility. So we'll look for that come Monday morning. And as options traders, many times those spikes in volatility will help our trades. So that's going to be something that I'll look for. If I am a seller of options, I like to sell options when fear is a little bit higher because I get more premium that way as a seller. If our volatility is lower, I tend to be more of a buyer of options because I'm buying when fear is down and willing to sell back then when fear might get elevated. So we look at the Qs, seeing a very similar story here in that when we've had down days, that volume has been significantly higher. Also with the Qs, we were back up almost to those prior highs as well. A logical place to do a little backing and filling, if you will, in the market. And I would suspect, pending unusual war news, that a pullback maybe to this range right here, around that 500 mark, would be a fairly logical down move at that point. And then look at VIX for the Qs or volatility for the Qs. And that's not elevated either, or at least it was not on Friday going into the weekend. Again, I would expect a pickup on that tomorrow morning. I would expect probably a significantly higher volatility reading once the VIX opens on Monday morning. And then IWM, Similar things here, except IWM is hitting resistance in this area here. So I think IWM is definitely the weaker of the three for sure. It also has bigger volume on down days. We're seeing that with IWM as well. So IWM is certainly the weakest of all of them at this point. And again, IWM, I was already expecting a little bit of chopping sideways, but with the current news, I'm expecting to move down in IWM as well, possibly down to this 196, 195 range, somewhere in there. So let's look at the volatility here for the Russell as well. And it's not, again, elevated. These are meaningless right now, the volatility indexes, because I'm looking at them on a Sunday morning when they have not yet opened after the bombing news. So again, I expect all these to spike up come tomorrow morning. Now, because I'm expecting an up spike in volatility, because I am expecting a little bit of a potential sell-off in our market, what positions might I consider? Assuming volatility is in fact a little bit higher, again, I'm making that assumption here today without knowing for sure, but if volatility becomes a little bit higher, if we do in fact open down a little bit here in this market, and I am of the opinion that we're not going to maybe go below this, call it 580 range in SPY, if I would expect that we might get some support there, I may consider selling a put spread in that area. So let's just come in, and I'm not going to have, again, accurate pricing on this because our market has not opened yet. I have not seen how far the market might gap down, and I have not seen how much volatility might pick up on this. But based on those scenarios, that would be a logical place that I might look to sell a put spread. So I would do a bull put spread in this case, and this would be in SPY, and this is what that would look like essentially. And again, I would adjust where I might want that to be. So coming back and looking at SPY, if my assumption is that we might not go much below that, let's call it 580 just for simple round numbers, then I would want to maybe sell the 580, and depending on how much risk or how wide I want this position to be, I might buy back, for example, the 570. And I would obviously do this closer into time as well. I'd probably do something like maybe a 10-day or 14-day, something like that. Now, what will happen on this tomorrow morning? This is not an accurate reading of what this trade would look like. Because tomorrow morning, if volatility is higher on the markets, which it certainly would be, let me just do the easiest way to do this is to look at this tomorrow morning. If I look at this tomorrow morning, I look at this same general trade, it's likely going to have a little bit lower risk and a higher reward to it. And the reason would be because volatility would be higher. So I would be taking in more money for selling that short put than what it's showing here right now. In fact, this is an experiment, something for everybody to check out. Again, assuming volatility goes up and our market drops tomorrow, I want you to go out and look right now as of Friday's close, I would have gotten $4.69 for selling that put. Again, if we do in fact sell off tomorrow morning, if volatility goes higher, I should get quite a bit more for selling that put. I may get $8, $9, $10 for selling that put. Of course, the other put that I'm buying long will also go up in value. Right now it's at $3.15. That's one I have to buy to provide this lower end protection. That's likely going to go up higher in price too. But I would urge people to just log these two prices from this video and then tomorrow morning open up this same trade and take a look and see how those numbers might have changed. I'm going to save this trade, but I'm going to save it and share the link for the purposes that people can go out and look to see what those numbers, how those numbers change. So that would show a loss, just for clarity, in this trade, because if I got filled at these prices, when volatility is lower. And then all of a sudden, volatility in this trade spiked significantly. And again, the cool thing about option strat is I can model that here. So if I had sold this trade and the price stayed the same, but volatility increased tomorrow morning, we can see that initially my break even here is going to be at some loss. But what's more likely to happen is the market itself is also going to drop. So again, if the market drops and volatility picks up tomorrow morning on the open, this trade is going to show an instantaneous loss. But again, I would not have filled at these prices. I'd be waiting till tomorrow morning to fill at the better prices that I would get. So please, again, understand this trade I'm sharing, I would not have asked for a fill here. If volatility was lower, I would have used a different type of trade. I'm doing this or sharing this trade with the purposes of showing you that there will likely be an increase in these prices come tomorrow morning's open. Of course, that increase is going to show negatively on this P&L. I know that, but that's also showing me how much better my pricing would have been on the open tomorrow morning if my thesis bears out. I hope you like the weekend update and the concept of this trade that I've shared with you here. I'll look forward to seeing you next weekend. Okay, now those of you that are part of the alert service, you know that I've been leaning toward a new trade that I designed called the Flyagonal. It's a combination of a broken wing butterfly on the upside and a diagonal on the downside or below the market. I started these trades back about 6 weeks ago. I've been trading quite a few of them personally. After testing them for quite some time, I started making live trades with them. I've been very impressed with the live trade so far. I've got 21 winners, not a single loser. Many of these I've started sharing, the ones you see here that are marked class. I've shared these trades in the alert service so that traders can follow along with these and see how I'm trading them in real time. I will be continuing to do that. In fact, I just opened 2 of them on Friday in the alert service. If you're interested in knowing more about the alert service, here's a brief little video on that for you.
Back in the day, how did I improve my trading the fastest? It wasn't a course. It was sitting side by side with real traders, watching them work. And now I want to give you that same edge. With the SJG Trades alert service, you get video alerts that don't just tell you what I'm trading, I show you how and why I'm trading it. Every trade's open, adjustment, or close comes with an explanation of the logic behind it. You'll also have direct access to me, as well as a constantly updated trade log and hundreds of past trades in a full video archive that you can review at your leisure. I usually have 3 to 5 positions live at once, all structured to work for accounts starting at just $5,000. It's like having a virtual seat next to a pro for the price of a cup of coffee a day, but without the travel or the massive price tag that would come with that. Just scan the QR code or go to the URL on the screen for more details. No contracts, cancel anytime. This is just serious guidance for traders who want to level up fast.
So hopefully that sheds some light on what the alert service is and how it works. So now we'll get back to the weekend update and the various positions. But I wanted to show you also that this is the P&L curve of those specific live trades over the past 6 weeks. So again, performing very well. There will be a hiccup here. Not every trade will be a winner, but this has been a very robust trade. I really like the way it acts because it uses the best characteristics of 2 different styles of trades to create a very wide window that the market can trade in, and this trade can still be profitable. That's the fabulous thing about it. Particularly to the downside, when we move to the downside, volatility picks up with a calendar or diagonal on the downside below the current market. Those tend to expand when volatility expands, giving us even a wider tent yet. And again, in the alert service, I get into how that works and why I put that portion of that trade to use. So looking at current open positions, again, I mentioned that I opened a couple Flyagonals here on Friday. So I opened this one that is just a 5-day expiration or 7-day when I put it on Friday. and it's just down slightly. That's just simply because of the bid-ask spread after hours in our market. So I think that will come into some profitability first thing Monday morning. This trade was put on slightly earlier in the day, and so it already has a little bit of profit built into it. And I put that trade out 14 days at the time that I entered it. So these are two separate Flygonals and SPX that I have opened. I'm going to be looking to get in the range of 10, 15, 20, maybe 25% profit out of these as I phase out of those positions. So we'll see how that goes. The other nice thing about these positions is, and this particular trade, is they are very scalable. So if someone has a larger account, they could scale these up. If they have a smaller account, they could trade SPY instead. I have traded this equally successfully with SPY, the Qs, IWM, the RUT. I've traded all of those using this, again, on a limited basis at this point, and it acts very well in all those environments. So again, I'm very pleased with the current structure and the way this trade is panning out, and I will be continuing to make more of these as I go forward. Then we have the wheel trade in PayPal that I entered just this last week. And in the wheel trade, my goal is to ultimately get assignment of PayPal. I want to own 100 shares of PayPal. So when I sold this put, if we get another 20 days out or so, and PayPal is above the $67.50 price, I will just collect and keep that premium. That will be profit to me. If PayPal falls below 67.5, I will get assigned 100 shares of PayPal. Once I get assigned 100 shares of PayPal, I will start selling calls against that position to bring in additional premium and lower my cost basis in that. If you want to know more about this particular strategy, about the wheel strategy, I'm going to put a link on the screen here right now that you can go to, and you can get a full diagram of the wheel, how the wheel works, and a little video that explains more about entering into the wheel, and then how you entering by selling puts, and then how you sell calls against that position once you've been assigned. It's a really good video that just takes you in depth into that entire process. So the final position I have is this position in Lucid Motors. Those of you that have been around a while know I bought a Lucid car. I'm very impressed with the vehicle, but I've given it now 3 months, a little over 3 months, and it still has not done what I was hoping it would do. So this is on the short list to have something done with it. Probably by the end of June, I'll be making a decision. You know what? Yeah, I'm going to ride this thing till it dies, or I'm going to pull the plug on it. So I'm watching a number of different things on that. They did get an analyst upgrade. It was a minimal upgrade. It's currently trading at $2.20. It was upgraded to $3. Big whoop. And that didn't seem to have any impact on the stock at this point. So I will be watching that pretty closely here going forward, and we'll be making a decision on that. Throughout the week this week, my goal is probably to see about opening one more Flygonal trade if the opportunity presents itself. And if I start getting decent levels of profitability in these two, which is possible with a pickup in volatility, what's going to happen if our market starts to go down here and volatility picks up? This downside TET, more often than not, will widen, and my T0 line will come up into here, giving me significantly more profit in a shorter amount of time. Again, we need to see how that plays out here this week, whether or not war worries are in fact going to spike volatility, and how much we might go down if they do. Because if we go down too far, of course, that is going to have some negative impact on this. But there are ways of adjusting that trade if that happens. Again, that's all part of the alert service, where you get to see me with a live video adjusting that trade, showing you exactly how and why I'm adjusting it, as well as a video on how and why I entered it the way I entered it. So with that, I'm going to wrap things up here for the weekend update for June 22nd, 2025. Thanks so much, everyone. And those of you that are part of the alert service, we'll see you throughout the week with new trades or adjustments. Those of you that are watching on YouTube, we'll see you next weekend. Please, again, give me a subscribe, a thumbs up if you find this of value. Take care.